Yo, yo, yo. It's your boy, the Options Boss. Hopefully, y'all sliding up in here with me. If you slide in, just say what's up so I know it's you. And we're going to dive into some charts today. Talk about everything that happened, who, what, where, when, and why. And, go over some things. Y'all see I got FinViz pulled up already. So that's definitely where we're going to be spending a lot of our time at. And I'm going to show y'all what's going on with these stocks. What's good, Brandon? Welcome in, good brother. We're gonna go over a few stocks tonight, few charts. Everybody that's jumping in, just know if you got any questions, anything market related, just drop a comment. I will definitely answer you in the order I see y'all questions. I'll be going back and forth between my screens, so I may see it immediately. I may see it in a couple seconds, but I'm definitely gonna answer everybody questions while we go through these charts. What's good, Logan? What's good, Jana? Glad everybody came to check me out. We're going to dive into everything. So y'all know we're going to start this thing off with SPY. I'm tripping, writing in the wrong spot on my computer. Crazy day for the market. Crazy day. Y'all seen that dump. And don't mind me. I'm just pulling up my watch list. And I'm just going to go through a few stocks on my watch list just to give y'all an idea of what I see, what I'm looking at. And if y'all got any stocks y'all want me to chart, just shout the stock out and I will definitely chart it and give you my opinion on what I see with that particular stock. No video, no doubt. I will get that video going right now. I thought I did that. This should be better for you. Let me see here. Welcome, man. Y'all know I'm a rookie at this, so I'm always forgetting to start the video. I'll get better. Give me another couple times at this, John. We'll get going. But yeah, we are definitely going to start it out looking at SPY, and I'm going to tell y'all what I see on that chart. So, to those that never charted with me before, I like to chart on multiple time frames. It just gives you an idea of where things stand. Gives you a better way of it being able to interpret what you see. So when I'm looking at this SPY chart, this is SPY right here, and I see this is the daily chart, and I see that in the process of being on the daily, obviously we was up here and doing pretty good to start 2022, and then we started dumping down, lost the 20-day EMA, lost the 50-day EMA, lost the 100-day EMA, and here we are on this candle right here. This candle right here, guys, opened at 453.75, got as high as 458.74, got as low as 444.50, and it closed at 446.75. So it closed towards the bottom. Not super duper strength right there at the very end, but still strength itself. So what I'm thinking, given this level, we closed, like I said, around that 446 area. That's right around here, which if you charted with me before, I mentioned that 446 was an area of target if we lost 450 at any point. And we did. So now we gained that 446 back. SPY has to hold here. If SPY don't hold here at this 446 area, then the next area that you could see any type of real support at is going to be this 200-day EMA. And that's around 439.28 roundabout. So that's going to be the next area. What's good, Chris? Welcome in, good brother. I hope all is well with you. Bud Big Bugs, welcome in. Hey, Nikki, welcome everybody. But that's going to be the next area. That 439 area, like around 439.28 roundabout. That's going to be the next area of support if we lose that 446 area. Now, I made a YouTube video yesterday. I hope y'all watched it. But if you didn't, you should definitely watch it at the end of this, because I was mentioning in the video that I saw more blood coming. I didn't think that we were done. And the reason why I didn't think that we was done was because of QQQ. And I'm going to get the QQQ in a second, but I do want to show y'all the weekly over here. Also, before I get to the weekly, you'll see the RSI is at 31 right now. So it is super duper oversold. and that could be a reason for a bounce. However, I don't really see the bounce right now. The MACD is super bearish, and that's obviously not a sign of a bounce. If you're playing this for a bounce, and I'm not telling you to, I'm not saying that I am, but if you are playing this for a bounce, one good thing for you to do is to wait until you have confirmation of a bounce. You know, being a chef, that's my background. We had a saying, don't try to catch a falling knife. And in the kitchen, we meant literally, if a knife is falling, don't try to catch it. However, we don't mean that in the stock market. What we mean is when the stock is dumping, let that thing dump. Don't try to buy the absolute bottom. You buy the reversal. And you'll hear me saying that a lot. If you see SPY reversing, you can get a call. If you don't see SPY reversing, stay out of the way and let that thing do what it's going to do. If you look at the weekly chart, the weekly, we have lost the 20-day EMA on the weekly with this candle right here. So that's not a good looking sign at all. SPY, had a couple of weeks where it was flirting around with that 20-day EMA, but hasn't really completely lost it. Whereas though here, we're completely under that at this point. So that's definitely not a great sign. The MACD here is bearish again. And the RSI is pretty neutral at this point. So that's not necessarily a bad sign for SPY, but everything else is. And then right here on the monthly, what you will see right here is what we would call a bearish engulfing candle. And there's a few other names for that. And you'll see this green candle right here, and that's December. And then you'll see January's candle forming right here. And also, you could call, on top of calling that a bearish engulfing candle, you can call that an outside bar. You can call that a 3 candle. Any of that would suffice. And what that 3 candle means is it has a higher high and a lower low than the candle before. So you'll notice on the monthly, the high is 479 and the low is 448.92. And over here in January, the high is 479.98. So we barely got a new high. And the low is 444.50. So that's a bearish engulfing candle. And that's definitely a bearish sign. However, the last time, is this let's see here. The last time SPY did have a bearish engulfing candle was in September 2021. And we actually did have a strong October. So maybe that's a good sign for February. But in general, a bearish candle, a bearish engulfing candle, is not necessarily a good sign. I see another look like is this bearish engulfing right here? No, we got a lower low right there. This guy's number 3 right here. You got this candle opens at 351. This is August of 2020. The high is 351.30. The low is 327.73. And this candle right here has a higher high, 358.75, and a lower low of 319.80. And we proceeded to have a weaker month the month after. So that's typically what you would see. You see another 3 candle right here, and you see, and this is February of 2020, and then you see the horrible dump. Obviously, this is when Rona was at his peak, or Rona was at his peak fear, should I say? And obviously, we had a horrible month to follow. So in most cases, if you see that, this is not a good setup. This is a sign that SPY could bleed some more, and I'll be interested to see how that plays out. But right now, if you're playing SPY, you definitely need to be having small positions so you don't get clapped, unless you're playing puts. You can be pretty aggressive on puts right here, right now, but I would definitely be very gentle on the call side of things if I was playing reversals. I'm also going to check out QQQ for y'all. Hey, Sherry, welcome in. And looking at QQQ, we start over here on a daily. And again, like I was telling y'all with the video I made yesterday, and again, if you did not watch that video, definitely go watch that video today. But you look at QQQ, we was here yesterday. We finished this candle at 366.21. So that was about $2 away from where the 200-day EMA is. And because of that, I was bearish. And if you're in my options group chat and you're here, you know, when I leave my morning message, I said this morning, I said the market was bullish this morning, but I wasn't a believer because I felt like we could flip like we did the day before. And sure enough, we flipped. I was fortunate that we weren't in a lot of calls at the time, especially tech calls, because that's what's going to get hammered. I got in a Roku call earlier today trying to be cute. I saw what was happening, and I got out of the Roku call at least because there was a pretty good premium tied to that one. But it's all right to get in some other calls in other areas, but you really want to stay away from tech calls. This candle right here, open at 369.67. It got as high as 373.87. It got as low as 361.17, and it finished at 361.72. So this thing finished towards the bottom. And that 361 area right around here is lower than that 200-day EMA. So QQQ on a daily has lost the 200-day. Now, I want to show you guys the last time this has happened because it's been a while. We're all the way back in 2021 now, nowhere near the 200-day EMA. And if you just look how far back, I got to scroll all the way back to March. I believe this is 2020 right here, all the way back to March of 2020. We lost the 200-day right here, March 9th, tried to reclaim it back, and then everything just failed. And after it failed, tech had a tough time. This is March 11th, and tech was down under the 200-day from March 11th to April the 6th, so almost a full month. So that's why when I saw how we were trading yesterday, I knew that this wasn't over yet. There's more to come. There's more blood to come. We're going to be down here for a minute, based off of what this chart typically does. But now trading in this 361 area, QQQ has a little support around 360. If it is to lose 360, the next area of any real strength, let's see here. I mean, you can see a little bit around 357. You can see a little strength right there in that 357 range. And if you were to lose 357 from 360, then you're probably talking about 350. So, I mean, guys, there's a lot more blood to come. 360, I believe we already lost that in the after hour. Let me see if I can pull up where we're trading at in the after hour right now on my phone real quick. And obviously after hour can be volatile at times, but just saying, right now in the after hour, we're trading at 358.60. So, you know, if QQQ is to lose that 357 area, then we definitely could be headed towards that 355, that 350 area, excuse me. So it's more blood to come, guys. This is not over yet. We're probably going to need to hit that 350 area, and hopefully by then, all the fear will be out the market. But right now, people are getting out. Tech is going to take the biggest hit because everybody is concerned about the potential interest rate rise. Yield rates, I think, went to a COVID high yesterday. And because of that, you know, people know that interest rates are going to be raising, and people are trying to get out of tech because tech needs interest rates more than almost anybody, so they can, you know, make their money. That's how they get big profits and things like that. Brandon, you're absolutely right. COVID, definitely a thing. But the biggest thing, not even necessarily is COVID, is more so them interest rates. That's why tech is getting hit the way that it's getting hit. If you look at the weekly chart, so right here, I mean, if again, I'm gonna say this with every stock. If you're looking to play this for reversal, if you're looking to play this for a bounce, you gotta wait for some kind of reversal. Now for QQQ, for me at this stage, a reversal doesn't happen until it reclaims the 200-day. If it reclaims the 200-day, maybe it gets a little bit bullish, but even then, I would be super duper leery right here, right now. And I just want you guys to know, because I know I got some people here who's not in the group chat, who's not in my tier 3. Charts are a great thing to know, but on top of charts, you also got to deal with real life and what's happening in the catalyst of the world. So with that being the case, or in this case, the USA, because China's problems overseas is the exact opposite of ours. They're dropping rates over there while we're trying to raise rates over here. So we have two separate issues. But if you're playing this for some type of reversal, you definitely want the 200-day at minimum before you can get some type of aggressive. Otherwise, small positions here, and I would mostly be bearish, if anything. If you looked at the weekly, on the weekly, you'll see we lost the 20-day EMA. And this candle right now is just barely above the 50-day EMA on the weekly. And this 50-day EMA is around that 357 area, which is the same area I told you on the daily we had a little support. So 357 is going to be key for QQQ. If we are to lose that 357 area, guys, again, this thing is heading to 350. And knowing that, you got to plan accordingly. You got to plan accordingly, not being a lot of calls if you in calls. Definitely don't be in tech calls, and definitely be not afraid to take small profits. My Roku profit, I think I made like $20 on my Roku calls combined. But I was just glad that I got out of there with a win. I was glad that I got out of there and didn't lose my shirt, because I shouldn't have been in that play in the first place. The RSI is pretty neutral for the most part. It's starting to get down there to that oversold area. The MACD is bearish right here. So again, not a good sign. Nothing I'm looking at on QQQ tells me that this is about to be any good. And if you look at this weekly, chart, I had to come back right here, guys, where you see this big green candle, you see that doji in between, and then you see that red right there. That kind of lets us know what's about to happen. That 3 candle combination, guys, that right there is an evening star setup. So when you see this, when you see green, doji, red, that lets you know that we about to dump. And since that happened a couple weeks ago, we have indeed dumped. If we can bounce off the 50-day, it'll be a little bit of saving grace, but that's no guarantee. The last time we was down to this area flirting with the 50-day was all the way back here again, March 2020, and we did lose it, and we didn't recover immediately. So this is probably going to be another long, slow recovery on QQQ based off of what it's done the last time. If you get over to the monthly, on the monthly, you'll see starting from November of 21, we're making lower highs. The high here is 408.71. The high here is 404.58. And then the high here is 402.28. So the lows is just getting lower and lower and lower. And that's because the bulls is chilling right now. All the strength is kind of on the sideline, and the bears are really dictating what's happening in the market. And that's going to remain that way. But I definitely wanted you guys to see that. I'm also going to pull up, always go with my big four, or the big four, should I say. So I'm also going to pull up DIA. For those of you that don't know, SPY is the S&P 500. That controls, obviously, as it says, 500 stocks in the stock market. So it's very important to know what SPY is going to do every day. If you trade in, there's no day that you should trade and not have an idea what SPY is going to do. QQQ is the NASDAQ that has 100 of the best tech stocks in the NASDAQ. And it's very important to know what the NASDAQ is doing, because if you're an options trader, and I'm talking as an options trader because I primarily trade options, even though I do have a long-term portfolio. But as an options trader, the best wins you're going to get 9 times out of 10 is going to come off of tech stocks. So it's very important to know what NASDAQ is doing. And that's whether it's calls or puts. You can get big wins on puts as well. So don't think that because I'm telling you guys that there's more blood coming, that that's a bad thing or a scary thing. That's actually a good thing, because it's going to give us opportunity to make money if we're patient and we're, understanding where these charts can take us, and we're doing our due diligence. So don't let me telling you more blood is coming to scare you away from trading. Just keep that in your mind. But on top of QQQ and SPY, there's DIA. DIA is the Dow Jones. The Dow Jones has 30 stocks in it, and it's a lot of, travel stocks and things of that nature, finance type stuff. So those are going to be the next level of stocks that will be impacted by DIA success or lack thereof. So every day that you're trading, you got to know what DIA is doing. And then finally, there's IWM. IWM is the Russell 2000. And every day you got to know what the Russell 2000 is doing. The Russell 2000 is small cap stocks. And, that's going to be your GameStops, your AMCs, ASAN, and stocks of that nature. You got to know what they're doing. MVIS, all these ticker symbols, they are in the Russell 2000. And it's 2,000 of those stocks, self-explanatory. But you got to know what they're doing, because when small cap stocks are doing, are moving, that's another good opportunity for options traders. Because what happens, small cap stocks, you usually got small premiums on the options. So you normally can get 6, 7, 8, 9, 10 contracts and not pay a lot of money. And then when you win in times 6, times 7, times 8, times 9, whatever. So that's why IWM is important in that way. And those are just things that I want you guys to keep in mind. So with DIA, getting on to that, you'll look right here. We just lost the 100-day. We was trying to hold it, and we finally gave it up yesterday. So what happens today? Today, we opened at 351.41. We went and reclaimed the 100-day briefly at 355.05. Remember, guys, as ugly as this market finished, we started this day bullishly. So we was able to get that 100-day back, and it rejected right after. We went as low as 346.81, and we closed at 347.33. So we closed towards the lows. Now, when I say we rejected, what that means is that we hit a certain area and we couldn't go much higher, and the stock turned around. So DIA actually rejects a good amount at the 100-day. If you look around here, you'll see we hit the 100-day right here. This is November 26th. We hit the 100-day here and we rejected. This day we actually did break through, but then we got back down, hit the 100-day, rejected. Hit the 100-day, rejected. So this is what's happening. We got a whole week here in October, early October, late September, where we rejected the 100-day like several times. We got a rejection right here in September, so forth and so forth. So that 100-day is a big problem for DIA. When it gets through, it does well, but it will reject a few times before it goes through, which leads me back to what I was saying about SPY and QQQ. That's another reason for more blood to come, because DIA is not going to just power through. It's going to play around a little bit. It's going to flirt a little bit, and then it'll eventually get through. So now DIA finishing his day at 347. The 200-day EMA on DIA is now in play. That 200-day EMA is around 345.50, right around this area right here. So we're going to see how DIA handles the 200-day. Now, we did hit the 200-day in early December, and we bounced off of it. So we'll see if we handle it the same way. Now, the reason why I believe that we could is because DIA, stocks that's in the Dow, are going to be affected by these rate changes, but they're going to be less affected than the tech stocks will be. So that's why you can have a better chance of playing a reversal on DIA as opposed to QQQ, where I'm more bearish, and SPY, where I'm more bearish. These Dow Jones stocks are not going to rely on interest rates as much. Some of them will do better because of interest rates rising. For example, Goldman Sachs, I believe, is in the Dow. Goldman Sachs is going to do better because of interest rates rising, because it's a bank, so they're going to get more money. So you got to really indoctrinate yourself on, what stocks are going to be affected by the rates rising. You got to try to time out as best as you can when the rates are going to rise, and you got to know to not be in calls on those stocks that's going to be negatively affected, and maybe you can grab some calls on the stocks that'll be positively affected. Like I said, I believe Goldman Sachs is in the Dow Jones, and they're definitely going to benefit from that happening. I do see my computer is about to die, so I got to get this charger because I'm not prepared. Don't judge me. Getting this thing together here. Y'all know this is actually my first live that I'm going live on, that I'm sharing it with whomever want to see it. Every other live I share it just with my options group, or I share it with members of my tier 3. So I'm definitely working out the kinks here. Hope y'all don't mind. But yeah, around this area, we're down finished. We do have some support here, but we also got that 200-day support. We have not broken the 200-day on DIA since back in 2020. November of 2020 was the last time we broke the 200-day. And when we was down there for a few days, and then we was able to gap up and get going. So we'll see. But for the most part, I do have more confidence in DIA than I do on SPY and QQQ, given where things are. Now we're going to look at the weekly chart, multiple time frames, guys. You got to always chart on different time frames. Don't just let one be your judge. So when I look at this one, similar to SPY and QQQ, DIA lost its 20-day EMA right here, and now it's a matter of what they're going to do. DIA has been in a bit of a consolidation type stage anyway. If you look, you'll see most of their recent candles top out at about this 360 area. So it's been a bit of a pullback. Anyway, we had a couple candles stick out, but most of them are around that area. Now we give up the 20-day EMA, and now it's a question on how far down we could go. If we are to lose that 200-day on the daily, if we are to lose that, then the next area of support would be around this 340, 341 area, whatever you want to call it. That would be the next area that you could really say could be some support. And if you look at the RSI, it's pretty neutral. The MACD is bearish, and obviously that's not a good sign. So I'm not telling anybody to play reversals, but if you do, definitely be careful and definitely check that MACD out. And if you don't know what the MACD is or the RSI or any other indicator that I'm talking about, definitely drop a comment, and I promise I'll answer. If you got any stocks you want me to chart, drop that comment. I'll answer. I'll chart the stock and just give you my opinion about it. And of course, for anybody that's here, I'm not a financial advisor or anything close to it. I'm just a guy that like trading options in the stock market. So hopefully I can, share my little 2 cents with what I think is going on, and hopefully it'll help somebody positively. If you look at the monthly chart again is bearish. We haven't made a lower low yet, so that's a good sign. But you're probably headed that direction. And right now, that the low of this candle, the month of December, was 340, which I believe on the weekly, I said around that area could be some support. That 340, 341 area. So again, that's kind of why I like to look at different time frames, because the weekly kind of showed me exactly what I saw on the monthly, and then the monthly kind of showed me exactly what I saw on the weekly. So I'm a little more confident in my opinion of DIA or any stock when that happens. So that's why I tell you guys, multiple time frames is definitely the best. I'll stick with it for that reason. Let's see here. Chris, you want to see TSM? Yes, sir. I'm going to show you IWM because I want to get the big four out the way, and then TSM will be the first one I'll look at. And Nikki, I will definitely answer your question after IWM. So let's pull up IWM, guys. When I pull up IWM, oh my gosh, this stock. I mean, first of all, the 200-day EMA is an afterthought here. We're not even within a couple of good days of the 200-day EMA. This stock opened at 205.36. Again, like everything else did, it went as high as 208.99. So we gapped up this morning, and it got as low as 233, and it closed at 275. So it closed at the absolute bottom of the bottom, and it's so low that you can't even see on a regular daily where is the next support level. You would have to either scroll back, or you would just switch over to the weekly, which is what I would do at this point. Switch over to the weekly, knowing that we're right here at that 200 level, and I would just find my next level like that. The RSI, super duper oversold. And again, oversold don't mean that it's going to flip immediately. It just means look for the reversal. And if you see the reversal, jump in. But if you don't see a reversal, don't try to catch that fall of the knife, because that thing is going to hurt. Let me tell you, that thing is going to hurt. The MACD, super bearish right here. Nothing good to see. There's nothing I see on this chart that would give me the warm and gooeys. So I'm probably more bearish on IWM than I am on QQQ. And that's hard to be because I'm super bearish on tech right now. But QQQ has been ugly for over a month now. Like you see December. It was ugly most of December. We had that little gap up, that little Santa Claus rally, as they call it. But everything else, I mean, my gosh. Like who wants to trade that going up? That's not a fun trade at all. So you got to be in puts there, or you got to be on the sidelines. If you look at the weekly chart, we lost the 20-day, we lost the 50-day, and we are now flirting with the 100-day on the weekly. And guys, for those that charted with me, you might be like, since when did we add the 100-day in? And credit where credit is due. I haven't really been using the 100-day on my EMAs. I've been using the 20, the 50, and the 200. But I was talking to my guy, Steven, and my guy, Anthony. Shout out to either of them if they on here tonight. I was talking to both of those guys yesterday, and they had the 100-day on their charts. And I thought, to see what they were seeing so I can answer their questions, I should add the 100-day to mine just so I can make sure that I'm seeing exactly what they see so I can give the best answer possible to the questions they was asking me. And then I thought about it even further, and I said, well, the 100-day is a solid EMA, so why not leave it on? So I left the 100 on just to give you guys the quick story. Like I said, shout out to Steven and shout out to Anthony if either one of them is watching this video right now. But we did hit this 100-day, and we're looking for support. So if we find any support on IWM, it's got to be right here. If this don't bounce right here off this 100-day, then the next key level that I'm looking at is going to be around 190. And I get that 190 from early 2021 / late 2020. So I'm going to show you this candle right here. The low of this candle is 190.94. And the low of this candle is 189.88. So again, in that 190 area, there could be some support. If IWM opens up red tomorrow, I'm going to give y'all a free one right here because I know everybody's not in my options group chat. I'm going to give y'all a free one. I'm not saying that you should do it. I'm just telling you what I'm going to do. If IWM tomorrow at any point is lower than 200, I'm going to get some IWM puts. And I'm going to get my options group chat. For those of you that know me or know of me or don't know of me, should I say, I'm the options boss. I got a paid options group chat where I share my plays with members of the group. And I can tell you firsthand, if I see IWM trading less than 200, myself in the options group chat, we're going to be in some IWM puts. I don't have no confidence in IWM right now. And the only chance this thing got of avoiding hitting 190 is by bouncing right now. If it don't bounce right now, we going to 190. And I want to eat off of that move right there. So that's just a little tidbit. Do with it what you will. The RSI super oversold. The MACD is bearish, as is most charts right now. And then I will look at the monthly. And the monthly, I see we are back down to the 20-day EMA. And the last time we touched the 20-day EMA, we did gap up. So, credit where credit is due. But that was off of a green candle. The last time we touched the 20-day with a red candle, there was blood coming. Big gap down that actually took us down to the 200-day on the monthly. Now, the 200-day, if we hit the 200-day on the monthly now, that would be mind-blowing. I'm not going to project that. But we definitely could retest this 50-day EMA on the monthly. That's not out of the question if you ask me. Now, I saw my guy asked about TSM. So, Chris, I'm going to pull that TSM up. I hope all is well with you and the fam, by the way. Hope everything's good. Here's TSM. So when I'm looking, I'm going to take a swig of this water. There you go. So looking at TSM, super bearish, guys. The first hint that we got all the bullishness, bearishness, is we got all this wick right here. All this wick right here. So the bulls was trying to push this up, but they could not maintain it. They could not maintain. And then from there, you got the lower highs. We got all the way up to 145. Couldn't maintain it. So then we got the 143. Couldn't maintain it. Then we got the 137. Couldn't maintain it. Then we got 135.90. Couldn't maintain it. And then we got today, the high of the day was 132.75. So this is definitely bearish right here. This candle opened at 131.49, got as high as 132.75, got as low as 128.20, and it closed at 128.33. So it did close towards the bottom, as did most stocks today, the way that we finished this day. If you were looking for a bounce, you're right at the area to bounce because you're right there on this 20-day EMA. So that could be a thing. But also remember, this thing was up near 52-week highs when it was recently trading. So this pullback could be a healthy organic pullback. This could be something that was needed. Retest the 20-day and maybe it bounces here. If it was to lose that area, you don't have any real support up until 125. And if you're going to lose that 125 area, now you're talking about you do got a little more support at the 50-day EMA. Granted, this stock hasn't really respected the 50-day EMA a lot as support in its past. As I look through, I don't see a whole lot of hitting the 50-day EMA and bouncing. A lot of stocks will do that. This clearly doesn't seem to be one. So 125 will be a area for me where I'm like, if we lose that, this could really turn into a big time pullback. Just keep that number in your mind if you are looking at TSM. Anybody, the RSI is pretty neutral right there. And the MACD is bullish, but it's starting to pull back now. It's starting to get to the point where it's borderline about to turn bearish, and it's another sign, along with those lower highs, that maybe this is a position that I do not want to be long on right here. Maybe this is a position that I want puts on if I want to trade this position. If you look at the weekly, you'll see we had the big bull candle right there, and then right now you got what's called a one candle or inside bar. And the only thing that one candle mean is that you are inside the candle before. So you don't have a higher high, you don't have a lower low. Candles like that is hard candles to trade for options traders, because then theta will eventually, catch up to you. You can always scalp. You can scalp on any candle. You just got to have the right entry and the right exit. But if you're not scalping, it's hard to make money on an inside candle, because you really make money, or you make good money, when the stock is moving, up, or if the stock is moving down. But if this stock ain't doing too much, it's really hard to make money as far as anything other than scalping. But this weekly candle is bearish as well so far. We haven't hit the lows of the previous week, which is 123.26, and I think that was right around, if I'm not mistaken, that's right around where the 50-day is. Yeah. So again, that's why multiple time frames, I see it on the daily, and then I go over to the weekly, and the weekly just told me the same thing. So I would use that as an area of support, even though historically this doesn't bounce off the 50-day too much. But because I see it on a weekly and a daily, I would consider that 123 area to be an area of support if it lost that 125 range. RSI pointed downward, going towards neutral again. The MACD is actually bullish here, but not doing anything major. But the MACD is actually bullish, all things considered. And then if I look at the monthly again shows the gap up. Like I said, we was at recent highs. We was at 52-week highs, and now we're starting to pull back. So the question becomes, has this stock ran out of steam, and is it pulling back to where it normally trades? And normally you'll find it trading in between like that 120 to like 110 area. That's where you find it for most months, all of 2021. That's where it was at, most of it. So it could be pulling back to that area. And if it do pull back to that area, I know, again, like I said, that 123 area was some support. If it lost that, you could definitely play it to get back into that 120, 110 range. Puts would definitely work in a scenario like that. So that's TSM. Let me see. Nikki asked me, what does gap means in the chart? What does the gap mean in the chart when you see the blank spaces in between some of the candles? So basically that means it's kind of like the saying say it gapped up or it gapped down. So basically that means, let's say if a stock closed, let's just say it closed at 300 and it opens the next day at 303. So what happens is there's going to be a $3 gap on the chart because there's no candle there. There was no trade in there, but it opened up higher. So that's what that is. That's when you're going to see a gap up or a gap down. And gaps up and gap downs is when you see it before it happens. Like if you're looking at a chart, like for example, looking at this chart right here, this TSM chart, I see there's a gap. Let me get back to that screen. There's a gap right here from August 24th to August 25th. So like if you're trading this, let's say, if you're trading this and you're in a put and you break below this candle, like right here, you break below this candle right here, you get to this candle on September 20th, and you say, hey, I got a gap to fill going down, because you know that is room from here to here. And now since you broke lower than here, you got the gap to fill going down. Now this gap actually did fill, but it took several days for it to fill. So you would have had to be patient to make that a good trade, but it did fill the gap. And the better you get of understanding where a gap to fill is, the more you're going to have opportunities to make money as an options trader. Yes, I am sliding up on y'all everything the game. Appreciate you showing love. Glad you watched the channel. Logan, you're right. AMC tanking has not been helping IWM, and I love that because I'm in GME puts right now. So let that thing keep dumping on us. I need that. That's all love right there. And Nikki, I will happily show you what a reversal looks like. So we'll use the same chart. So looking at TSM, because I'm already in the area. So TSM is dumping right here. August 10th, it gets as high as 119.05. And then it starts dumping. And you get to this candle right here. And this candle is at 109.71. That's the high of this candle. So that is pulling back. Now, this next candle is a reversal. How do I know it's a reversal? It has a higher high. So in this case, the high was 109.71. The high of this candle was 111.33. It has a higher high, and not only that, because a higher high alone doesn't make it a reversal. It has a higher high. It closed higher than this candle, which was 108.12 compared to 110.96. And we reclaimed the 200-day EMA. So I think with QQQ, I told you guys, I said, if you wanted to play a reversal, it's got to at least get that 200-day EMA back. So right here, I see TSM reclaim that 200-day. So if I saw this and I jumped in calls right here, I take that 111.13 all the way up to 119 in a matter of 2 days. That's a huge win right there. That's a $9 move on a $120 stock. That's a huge win right there. For those of y'all that's in my paid options group chat, you already know what's going to happen if we get a win like that. I'm going to say what? We going to Sizzler because that's always my inside joke. So you see this catch the 200-day. You see it get a higher high. You see the green candle coming back. You say, all right, I'm going to play this reversal. You jump in. You ride it up $8. You got a huge win. That's how you play a reversal. Now, again, like some people, they would have saw it hit here, this candle on August the 17th, closed at got as low as 110.75, and they would have got the call here. Now the reason why you don't get the call here is because nothing told you it hit the 200-day. We see that, but nothing told you this stock was about to turn around. Nothing said that. It just hit the 200-day. All because you hit the 200-day don't mean you automatically turning around. So you hit the 200-day, you buy the call right there, you close at 111. The next day you close at 110.45. Now you're mad. The next day you close at 110.52. Now you're mad and you're losing money because Theta's kicking your butt now. The next day you close at 108. Now you clap. So now you done close this position. You done took a big loss because you got in too early. You got in because it hit the 200-day. You never get in just because it hit or just because it fall to a certain EMA. Because when it falls to that EMA, you still got to wait for the reversal. If you don't wait for the reversal and it lose that EMA, then you lost money. So, we see it hit the 200-day on a comeback, and then we see it gap up, and it took off. So, big win. And if you stay in that trade for more than 2 days, I just said 2 days because you know me, I like to be in and out. But if you stay in a trade for more than 2 days, you can run that thing up 121, all that other. What's the highest? I think 123. That's a $12 move if you stay in it for more than 2 days. Now, one thing the 200-day is good for, if you buy shares off the 200-day. So again, talking about the 200-day. So if you buy shares right here at 110.45, which I would not have done, I would have bought right here. But if you buy shares right here, you don't got to worry about theta or anything like that. Then you let them shares bounce off the 200-day. And, however many shares you got, if you got 10 shares, you made $120. You got 100 shares, you made 1,200, so forth, so forth. So shares is good in that instance. Excuse me, guys. I am a human. I know it's hard to believe, but shares is good in that instance because you ain't got to worry about theta. You don't got to worry about an expiration date. You can just let that thing ride and take it whenever you take it, as long as it got positive momentum. This, you could have rolled all the way because it was making higher highs every day. So you could have rolled this all the way. And even if you didn't sell it here, even if you sold it on this candle because it's the first day you don't make a higher high, you still rolled it from 111 to 123. That's a nice win. That's a huge win right there. So shares is good for that reason, even though obviously y'all know me as the options bull. So that's what the reversal looked like. Steve, I figured you was here because I know you like learning, so I knew you was gonna be here. Logan, yeah, I definitely appreciate that. And Logan wants to look at Rivian and Lulu, and I'm definitely interested in those and AFROM in the video. And yeah, I'm with all that. So let's check it out. Let's start with Rivian. And this chart, I mean, you talk about ugly. This thing is definitely that. So we've been gapping down, well, not gapping down. We've been falling down pretty much daily. Every day is how low Rivian going to go. So right now, this candle opened at 70.79, got as high as 72.08, got as low as 64.81, and closed at 65.02. So Rivian closed towards the bottom. I believe Rivian is lower than this IPO price right now. Matter of fact, is this the IPO? No, that's not the IPO. But I believe it's lower than this IPO price right now. So it's definitely selling off. The RSI, super oversold right here. But again, we got to wait for the reversal. We can't just expect the reversal. And then you look at the MACD. And the MACD, super duper bearish. Nothing about this chart tells me buy calls. So this is a scenario where you got to be disciplined. So like even if Rivian opened up, it closed at 65, right? Even if Rivian opened up at 68 tomorrow, 69, you can't buy a call right here. You just got to chalk that because this is not reversing yet. This candle got as high as 72.08. So for me, if Rivian was reversing as of right here, right now, where we situated, I needed to be higher than 72.08. If we got the 72.08 and rejected, then what you think we can do if we got the 69 or 70 or 71? We can reject any of that too because we already rejected 72. So that's where you got to be patient and disciplined. And Logan, I know you actually are pretty disciplined. So I'm just kind of giving a game to whoever's here. But that's what you will look for. Like you wouldn't just hop in just because it opens up green. Just like the market opened green today, I got in very little calls of new positions. And one of them that I did get in, I realized what was happening and closed it as early as I could for a small win. If you look at the weekly, again, we just dumping down. They had support around this area, around that 78 area, lost that, and it was pretty much bombs away from there. The RSI, super oversold. My gosh. I don't think I ever seen the RSI hit zero before. That thing looked like it was on zero right here. I'm guessing that's because it was just the start of the stock itself. But this thing messing around and hit zero again. Who the hell knows? But this thing is super oversold right now with no sign of a reversal. So we're not playing it for one. We playing bearish here. And it's trading at 52-week lows. So when a stock is this low, the only way you really it's two ways you know what's the next target. You could pull out wow, I'm having a darn brain cramp. You could pull out the Fibonacci, and the Fibonacci would tell you what's the next area that you can look for, which I actually got to look into that, but I don't even know if FinViz, which is what I use to trade, I don't even know if they got the Fibonacci. That's actually a problem for me. But on top of the Fibonacci, the next thing you would do is you would think about psych levels. So psych levels are human thoughts. Humans, they get caught up in round numbers. They get caught up in, like nobody says, I'm going to sell at 63.74. Nobody says that. If they're going to sell, they say, I'm going to sell at 63.75 or I'm going to sell at 63 even or whatever. So when I'm thinking about a psych number, I usually think about the round numbers. So I think about if we trading at 65.78, you might have some support at 60. You might have some support at 65, excuse me. So you got to think about either the Fibonacci's if you're looking for a target here on puts, or you got to think about human cycle levels, 65, 60, 55, numbers like that, because those are numbers that people are going to trade at more times than not, just because it's a human nature thing. You guys that's here, you all own shares before. You never set a price to sell your share at 119.22. You might have set it to sell at 120. You might have set it to sell at 119 even, hypothetically. But like nobody deals with those weird numbers like that. And if you think I'm wrong, you can let me know and I'll stand corrected. But for me, with the shares I've had and from talking to other people that trade, nobody never sets a trade like that. So 65 will be a psych number to look at. 60 will be a psych number to look at, and more info will be available if I went over to my other site that I use and pulled up the Fibonacci. So that would be how that would go. On top of Rivian, he asked for Lulu. So let's check out Lulu. And looking at Lulu, guys, we start off with the daily, of course. And Lulu was consolidating for a bit, kind of trading inside, and then we dumped right here. So this candle, I was waiting for this candle. I'm actually upset that I missed it. But the one thing about being human is you only got one set of eyes, so you can't see everything. But Lulu definitely dumped right here. Opened at 334.50, got as high as 340.29, got as low as 321.65, and closed at 322.53. So this thing closed near lows. Yeah, near some of the lows that it's been in months and months. If I was looking at support on Lulu, you probably got some like around 316, like around this area. The candles in June, early June, look like some support areas, 315.79 and 315.90. So I would set an alert, which I'm gonna do right here in front of y'all, because I think more blood is coming on Lulu. I like Lulu, but it's super overvalued, I think. And I want some more blood here. So I'm going to set an alert at 315.50. Again, free game if you so happen to be here. If Lulu was trading any point tomorrow below 315.50, I'm probably going to be in puts on Lulu. And probably so is my options group or tier 3. So, that's definitely something I'm looking for. However, if it were to bounce, this 319, 320 area would be the area it needs to bounce on. If it loses that area, it's definitely going to go to that 315.50 area that I mentioned to you guys. And then from there, what I would do is I would want to catch it lower than that. And if I catch it lower than that, I could probably ride that thing down to about 306, it looks like. So that's the move I'm looking for. This move that happened to Lulu today, I think I was in Lulu last week with a put. And we might have made a few pennies on it, nothing serious. But this is the move that I saw coming. So took profit a couple days too early, a week too early. This is the move that I saw coming that I wanted to eat off of, but I didn't. And that's why options is about timing. Even when you make money on an option, you could have still timed it improperly. But if you make money, it's easier to take than if you time it properly in a loss. Right here on a weekly, excuse me. Right here on a weekly, you see we playing around with the 100-day. The last time we hit the 100-day, we was able to bounce off of it. This time, not so much. So we'll see. And again, the last time we hit the 100-day, we gapped down the next day, but we did finish above it. So we'll see. Maybe Lulu gets some strength. It's hard to really have confidence the way this market is trading. But if you were playing Lulu for a bounce, you want it above that 100-day on a weekly. You can't get in unless it's above 340. If you get in to calls on Lulu and it's not above 340, you're really asking for it. You're really asking for it. And again, because I see that, I'm setting an alert. Now, this is not saying that I'm trading Lulu right now, but if it goes above 340, I want to know. And when I know, I can make a decision from there on if I'm jumping in calls or not. But the more alerts you set, the better off you'll be, because this way you're aware of everything that's going on. So that's one thing that I want y'all to get in the habit of. Set alerts for yourself. And if you don't have FinViz, hit me up and ask for my link for FinViz so I can send you the link. I will make a few pennies off of it. I got to disclose that part so you know. And if you don't want to help me, that's fine. Help yourself and get FinViz without my link. But definitely have FinViz and set as many alerts as you possibly can, because the more alerts you have, the more you're going to be in the know of what's going on. Even myself, I have a bunch of alerts, but I'm going to even start setting even more. I'm going to kick it up even another notch, because it's good to know what's happening in the market. This way, when you have that stock you've been waiting for to start to dump, you're not in the dark until you look at it in the after hours and say, I could have made some money there. So alerts is good for you. Right here, you got the big dump down. You lost the 20-day EMA on a monthly. Again, nothing is bullish about this stock. I think that Logan mentioned puts below 323, and you are absolutely correct. Puts do work in that area. So that's that. You asked for a couple other stocks. Let's see here. You asked for AFROM and NVIDIA. So I'm gonna check out AFROM and NVIDIA as well. And you're welcome, Nikki. Anytime, Queen. That's what I'm here for. Looking at AFROM, guys. Always starting out on a daily. AFROM opened at 65.27, got as high as 69.28, got as low as 59.29, and closed at 62.80. So this thing closed red, but it didn't close necessarily towards the bottom. It was able to fight off a lot, or a little bit, should I say. Now, AFROM is one of them stocks that I think could be near its bottom. Pretty much all the gains that they had after coming to that deal with Amazon, they pretty much gave all of that back. You see the gap up here. This is when the deal happened with Amazon. You see the gap up here and the subsequent pullback, and then even bigger gap up. But after that happened, before that happened, should I say, they were trading in the low 60s, and now if you look at today, they're back to trading in the low 60s. So at this point, this could be a stock that's undervalued, and this could be a stock that if you buy shares, might be a good time to buy. And again, if you bought it at the 200 day without some kind of reversal, if you bought it at the 200 day, you would have been mad. But if you wait for the reversal, which is what I always tell you guys, now you start looking. So all right, we down here. We at the bottom, or it looks like we could be at the bottom, but I'm not going to just buy calls that open. I would need to see AFROM starting to make a move upward again. I don't want to get the cheapest price per se. I just want to buy in when I think that thing is going to start moving again. So for me, if I was buying AFROM shares, I need AFROM over 69.28. That's when I would start buying the shares. And I would play it hoping, even if it just go up, even if it don't go all the way up like it used to, even if it just went up to the 200 day again, that's a $36 move right there, $37 move. If I buy shares on a stock that moved $37, I am more than happy with that. Let me tell you. So, you don't even need AFROM to do what it used to do. But from here, puts could work if this thing was to lose 59. I'm not interested in puts until it breaks 59, because it already hit 59 and it bounced. It hit 59 and it bounced and finished at 62.80. So for me, I need to see this break 59. But if this breaks 59, I'm definitely interested in puts right here. The RSI oversold, the MACD bearish again. Nothing good to see here to be positive. The only positive I got is that I know this line, if I was to draw this line right here, I don't know why that wasn't there already, but if I was to draw this line, we are near an area that's been support for several months, all of June, all of July, all of August. That this area that we at was support. So with this pullback, the only thing that I got to be hopeful for is that we are indeed at that support. But I would not make a move until I've seen the confirmation of it. That's going to be key. Always want to see the confirmation. If I was to look at the weekly, this weekly is super ugly. My gosh, this is Jay-Z and Nas super ugly right here, y'all. But that thing dumping down big time. And again, I don't see anything that's telling me it's reversing, but I know below 59, this thing got room to the downside. If I want to play it to the upside, I need this to show me some kind of reversal. MACD super bearish right here. Nothing to see, nothing to get excited about as far as a reversal goes. Then you got your three black crows right here. Big red candle, big red candle, big red candle. That's never a good sign. So it could be more blood to come. If it breaks that 59 area, I'll probably be more aggressive with puts here because I see those three black crows, but I'm not going to jump into it until it breaks that 59. Otherwise, I'm going to look at this and say that, that was the bottom. But again, setting my alert, I want to know. Below 59, I want to know. Above 70, I want to know. And this is how, when stuff happens, I'm aware of it because I'll get an alert. Hey, your stock is trading at this number, or your stock is trading at that number. And that'll let me know what I need to know. I also see NVIDIA. So I'm going to show NVIDIA to you guys real quick. Checking out NVIDIA. NVIDIA, again, lost that 100-day EMA and looked like it could be headed to that 200-day. Now, if NVIDIA hits to that 200-day, NVIDIA gapped up. I forget if that was earnings or what, but NVIDIA gapped up here in late October. And pretty much what would happen is it would have given all its gains back if it hits this 200-day EMA. And that would suck for me because I do got leap options on NVIDIA. But if it hits that 200-day, I'll probably start looking for some type of reversal, and I'll be looking to average down on my leaps. These leaps is a year out, so I mean, I'm not tripping. But it definitely feels better when you see that thing mooning than as opposed to you seeing that thing dumping. This candle right here, open at 252.82. Got as high as 255.79, got as low as 240.78, and closed at 241.50. So close towards the bottom. It was just a real bad day to be a NVIDIA call option holder. And right now, what you're looking for is you're trying to find that next bottom. And that next bottom is the 200-day EMA. So if NVIDIA have any kind of weakness tomorrow, what did this thing close at? It's closed at 240.78. If this thing have any kind of weakness tomorrow, if this thing, lose 240 for whatever reason, I don't know that we not headed to this 200-day EMA right now. So even though I got a long call, and even though I want NVIDIA to do well, I also don't have no emotional attachment. So I will get a short-term put, and I'll make some money while this thing is going down, and then hopefully it stop going down at a certain point after I close my put for a win and start going back up again, and then I make that money going right back up. That's trading without emotion, and that's trading, without favoritism or anything like that. Like I told you guys, I'm in NVIDIA long, and I want NVIDIA to do well. But if NVIDIA is not going to do well, that's fine with me. Just keep dumping so I can buy puts, and I'll get the money back that way and more. So just fine with me. No emotion when it comes to it. I'm not attached to the stock. If it does well, great. If it does bad, then I'll buy puts and enjoy that just as much as I enjoy when it do well. The RSI, super oversold right here, hoping for some kind of bounce. Definitely don't see much of a bounce. Got a tiny bit of support in this area, like this 239 area, but it's nothing here that really makes me confident that this is going to bounce. And again, this is a tech stock. Y'all know how I feel about QQQ. This is a stock that's going to get hit with increased interest rates, which is an inevitable thing. So there could be more blood to come. The MACD is bearish. Nothing there tells me that this is going to bounce right here, right now. And if I look at the weekly, we just lost the 20-day EMA. The last time that this has completely lost the 20-day EMA, got to go back to COVID times, March of 2020. It did get it back the very next month. So, maybe it does that. Maybe January is going to be trash. And in February, the bulls will start coming out to play. Obviously, January has been a month of us having big losses in the stock market as far as stocks pulling back. The RSI is pretty neutral. The MACD is bearish right here. And then you look over at the monthly. And looking over at the monthly, you see a couple big red candles right there. Took back all those gains in November when we got the 52-week highs. All those November gains is gone. And now it's a question on if they can even save the October gains. But like I said, if it don't, it's going to take it back to that area where the stock was trading at prior, which, not going to be good if you are long here. The MACD is still bullish on a monthly, and the RSI is actually having a healthy pullback because the last time it pulled back into this area, you'll see that pullback. It did take a year, actually. But after that year, it did do well. So hopefully this pullback don't take a year. But the last time we was not overbought here, we pulled back for a year and then we took off again. So we pulled back here. We'll see if it's a takeoff again. Or if it's not a takeoff again, then we'll try to reposition with puts. And on that note, I do want to alert myself on 240. If we lose 240, NVIDIA puts could be a move for me. And that's how you want to do things. With that being said, guys, I'm not going to hold y'all too long. I've been here an hour. I got to get some dinner. Y'all got to get some dinner. Y'all probably already eating while y'all watching the video, so good for y'all. But I need a grub. So it's your boy, the Options Boss. I'm gonna go live a little more often. I'm a holler when I holler.